Hi everyone. I'm your host, Accidental Investor Prince. So I welcome you all to the Long Thought video series, episode one. So we are fortunate enough to start with a very great and interesting team of three people, namely Navid, Sanjay, and Parth. And they are so a very warm welcome to the Bastion team. Navid, over to you.
Sure, sure. Thank you, Prince Bhai. Thank you for having us. Thank you for giving us the opportunity. We are grateful to be here.
So coming to the sound management thing. So basically, I would, although you'll be explaining, but again, if you can cover potential good traits about a sound management and what are few red flags or big no's when it comes to management, because whatever the framework be, if the management is not a good one, then definitely the investments have very relevance as far as making money for the investors is concerned. Yeah, over to you guys.
Right, right, Prince Bhai. So we have again, like we did for strong businesses, we have, jot down a few characteristics along with examples as to why those examples fit in those characteristics and how those characteristics can be helpful and risky. So whenever we discuss about management, this is one peculiar statement which comes to our mind, all the time. And that was said by Mr. Raamdeo Agrawal. He said that in India, it makes no sense to invest in a good business which is run by a bad management. It is like multiplying 100 by 0, the outcome of which is obviously going to be 0. So here, what he's trying to, make us understand is, finding the right management is paramount. And even if you are able to find a good business which is run by a management which is not willing to share the good outcomes with minority shareholders, it's going to be a useless outcome for you as an investor. Now, here are a few characteristics which we like to see when we are trying to understand the quality of the management. The first and the foremost is capital allocation, right? Now, here we have an example of a company called Vedanta. Now, what Vedanta has done over the past 3.5, 3.5 years is something which we would like to share, right? So, Vedanta generated around 1,06,000 crores cash flow in the last 3.5 years. Apart from that, Vedanta sourced another 14,200 crores by the way of borrowings, right? And on the application side of it, this is the sourcing side. So sourcing may they sourced 1,06,000 crores through operations and 14,000 crores through net borrowings. On the application side is where things get interesting and where we believe they did not allocate capital properly was so they have obviously Vedanta is a company which has high debt. So obviously they paid 11,600 crores worth of interest. But if you look at the dividend side of it, they paid 85,000 crores, 85,100 crores as dividends, which is basically 80% of the uh, cash flow from operations. So 80% of the cash flow which the company generated from operations in the last 3.5 years was paid out as dividends. At the same time, the debt, which was at a much lower number 3.5 years back, now stands at 75,000 crores. So what has happened is जितना कैश फ्लो बनाया वो डिविडेंड में दे दिया, कंपनी के बैलेंस शीट पर डेट भी बढ़ गया. And maybe, one would argue that the parent company of Vedanta, which is Vedanta Resources Limited, wanted money and therefore they paid out hefty dividends for that company to pay off its debt. That has also not resulted. If you go through multiple articles, which are obviously available on Google by a simple Google search, you will find that Vedanta Resources Limited is still under the debt trap which it was. तो ये जो डिविडेंड जो कंपनी के बुक से बाहर गया और प्रमोटर्स को गया या जिनको भी गया, वो शायद वो पर्पस के लिए यूज नहीं हुआ जिसके लिए वो यूज होना चाहिए था. एंड बिफोर दैट ऑल्सो कंपनी में जब आपके पास ही इतना सारा डेट है, तो rather than paying off dividend, we would believe that the ideal capital allocation would be to reduce your debt since you are managing to make such strong cash flows. So this is one example where we believe the capital allocation was not up to the mark, right? Second example is where we compare bearing companies and how they have allocated capital. I think Parth will explain this better. Over to you, Parth.
If you look at Timken India, so it has generated majority of their or source of fund has been the profit, and which is fair, which is how things should be. The same is with the SKF India, where 76% is the profit is the main source of their income, and so both of them generated. Basically, point is both of them has generated good amount of cash from their profits, right? But the different thing that Timken has done versus SKF is that Timken has invested more than 50, close to 50% of their cash generated into purchase of fixed assets, basically into their businesses, right? Purchasing the assets, capital expansion, and everything. Unlike SKF India, which is majorly has done limited amount of purchasing of assets, which has majorly gone into depreciation, I mean, basically refurnishing of assets and stuff like that, rather than doing any major capital expansion. Now, that thing is clearly evident when you look at the sales growth last 5, 10, 3 years for Timken India versus SKF India. So hands-on, Timken India has outperformed in terms of scales. We have not included the price performance, but if you were to include, look at Timken India price performance versus SKF India from 2010 or 8, Timken India has handsomely outperformed SKF India in terms of that as well. So, capital allocation, where you generate the source is important. And in that case, Timken SKF are same. But where you reinvest that money, right, is also very important. If you keep reinvesting into your own business and are able to maintain their ROC, which Timken India is able to do that as well, right? So it rewards the shareholders definitely and shows a good capital allocation judgment of the management, right? You can take to the main slide now.
And
Over to you.
and
Yeah.
I think continuing from what Parth said, if you look at the price performance, itself shows you how market values capital allocation over a period of time. Sometimes we feel that all these are theoretical things, and ये सब theory में अच्छा लगता है, market price is driven by something else. But if you again, we are not talking about 6 months, 2 quarters, 3 quarters. We are talking about over a long period of time. All these things do matter, and if you are able to lash onto a company which is known for allocating capital properly, has done that very well in the past, and is expected to do that very well in the future, there are very good chances that you have an outperformer in your portfolio. So the point which we want to drive here is that market also puts a lot of emphasis on these kind of aspects, and these are not just theoretical in nature. After capital allocation, where we are able to find the hidden agendas of the management is the related party transaction, right? So here we would like to cite an example of uh, a consumer durable company, which is IFB Industries. Sanjay, you can take it over.
So now, so we all know that as Navid has already said, management को judge करने का या to know the management better, उनकी कितनी कंपनीज में मतलब सब्सिडरीज बनाई है, एसोसिएट बनाया है, कौन सी कंपनीज में दे आर ट्राइंग टू उन्होंने द बिजनेस इज देयर विद द मेन कंपनी व्हाइल दे हैव अदर सब्सिडरीज और अदर which is not into the same business, or which is they have not listed the same business to the parent company, so they are trying to do that stuff. So all and over a period of time, we all know that the chances of misleading the management has been come over this related party transaction or capital allocation, or we discuss going forward as well. In the same case, IFB, the related party, so IFB एप्लीकेशन ट्रेवल सिस्टम्स करके उनकी एक सब्सिडरी है और इनकी एक रिलेटेड पार्टी कंपनी है. सो अब आईएफबी इंडस्ट्रीज का एबिडास देखोगे और वर्सेस द कंपनीज गिविंग द related party transaction to the same companies has been quite more or less or even higher than the EBITDA which the company is generating. While these transactions or this, and we are not saying that these transactions are fully wrong or right, but we are just trying to put it out that we should be cognizant about the things, that how we should always check the related party transactions numbers and make sure that we compare with the right metrics and judge on the perspective that whether this numbers or whether this transaction makes sense into the business perspectives which the company does or not. So yeah, the travel and expenses which you see and the travel and expenses which we see in the expense as well in the IFB industry, they are both the different things. So probably, whether the amount is going in the right way or wrong way, we will not find it out in a judgment by saying it all that this is wrong or right. But we should be cognizant about these things when we invest into the businesses or try to find the ideas into the businesses. Yeah. What do you know?
Yeah, so I think just adding one point to what Sanjay said, the tricky part of investing is कई बार क्या होता है हमें जब कुछ इरेगुलर चीज दिखती है तो हमें ये पता तो चलता है कि इरेगुलर है, बट एग्जैक्टली प्रॉब्लम कहाँ है वो पिन पॉइंट कर पाना एट द फर्स्ट प्लेस बहुत मुश्किल होता है. बट आई थिंक वो इरेगुलरिटी को भी डिस्कवर करना बहुत जरूरी है, बिकॉज दैट इरेगुलरिटी कैन गिव यू अ सेंस as to whether it fits in your risk management framework or not, whether it allows you to take that irregularity risk or not. तो वो irregularity पता करने से भी आप कई बार एक गलत बिजनेस में इन्वेस्ट करने से बच जाते हो. Now there are a couple of more things which we have seen and which does not make us comfortable when we look at these kind of things. So कई बार क्या होता है, the company which we are trying to study, ठीक है, उसके मैनेजमेंट का ही, वो कंपनी के मैनेजमेंट का ही एक प्रमोटर एंटिटी या तो वैल्यू चेन में बिजनेस कर रहा होता है या तो कंपीटिंग बिजनेस कर रहा होता है, विच इज नॉट अ पार्ट ऑफ द एग्जिस्टिंग कंपनी विच वी आर स्टडीइंग. So these two aspects makes us uncomfortable, and we were able to in our study very recently we were able to find both these aspects in a company called DCX Systems. Now DCX Systems again is into defense EMS, a very hot space right now. Company has also done really well, but if you look at the group companies and its structuring, it might want to make you think twice before becoming really positive about this company. So अगर group companies हम देखें, so there are 4 companies which form a part of group companies for DCX system. First is the Renil Technologies, which is a wholly owned subsidiary and which is done, which is established for backward integration efforts. जब wholly owned subsidiary होता है तो you don't question too much, because whatever transaction you do with that wholly owned subsidiary is the part of the consolidated financial statement which you observe. Things become tricky when the existing company or your company is dealing with promoter entities or other related entities which do not form the part of the consolidated financials. Now here, if you look at one company, if you look at the second company, which is RNSE Tronics, it is a promoter group company and it is in the business of selling electronic components. Now, one interesting part is Mr. H.S. Raghavendra Rao, who is the chairman and managing director of the company, is also the director of RNSE Tronics. And if you look at the related party transactions for the financial year ended 2023, you will be able to see that company has purchased 745 crores. These numbers are in million. 745 crores worth of raw materials in the year 2023. Similarly, for the year FY22 also, the company has done material purchases from this related party called RNSE Tronics, which has been, the managing director, Mr. H.S. Raghavendra Rao, is also the director of RNSE Tronics. तो इस तरीके का जब हम स्ट्रक्चरिंग देखते हैं कि प्रमोटर की कोई एंटिटी ही हमारी मेन एंटिटी को रॉ मटेरियल सप्लाई कर रही है या तो फिर हमारी मेन एंटिटी से फिनिश गुड्स परचेस कर रही है, we always become skeptical of this fact, because ऐसा नहीं कह सकते कि this is absolutely wrong or there is some mishappening definitely which is taking place. But this kind of structuring, which I just explained, gives management a room to do some maneuvering of funds, which is not good for the shareholders. तो इस तरीके की जब आप स्ट्रक्चरिंग देखते हो तो ऑटोमेटिकली a light should spark in your mind saying कि okay fine, I am able to see this structuring, and this structuring by its nature gives management a room to maneuver which might not be in my favor. Therefore, I have to be cognizant of this fact. Similarly, DCX की continue करेंगे. If you look at the other 2 companies after RNSE Tronics, there are 2 companies. One is DCX Coal Enterprise and one is Venus Innovation Technologies. Now, again, these two are also promoter group companies. Now, what becomes interesting is if you try to see the explanation of both these companies. So, company explicitly saying that both these companies operate in the same business in which DCX is operating. So, this is basically a promoter entity operating as a competitor of the existing entity. Now, in our research, we also went to the website of IAI, which is Israel Aerospace Group, right? Which happens to be the largest client of DCX. जब हम Israel Aerospace Group की इंडिया की वेबसाइट पर गए, we were able to find a lot of partnerships which the company has done with a lot of Indian companies, and we were able to find a company called Vinyas, which is nothing but the promoter entity. So here we could find a promoter entity which is competing with the existing entity and is also doing business with the largest customer of my existing entity. Now, again, coming to the previous point, we are not saying that this is 100% wrong, but this is something which makes us uncomfortable. After this political exposure, I'm sure all of us have, listened to a lot of stories. PR, promoter is politically exposed, and therefore, one has to stay away from that business, or one has to be cognizant of the fact that politically promoter is politically exposed. Again, this is just an example which we came across while studying a company called SIS. Maybe Sanjay can take it over and explain further.
So yeah, nothing. The point being is here is no, it is good. Sometimes it is good for the company. Sometimes it is bad for the company. But from the shareholders' perspective or from the investor perspective, we should be cognizant about the fact that this company may be or may not be hovering around or manipulating things. And I'm not saying the SIS is doing that, but the case point being here is they are they are, as Navid said, they are exposed with political parties, and this gives a room to do many many miscalculation or win the orders from the government or something sort of like that. So just to be aware that which promoters or which parties or which investors, or while analyzing the same, whether this is a and we all know that to be in the good point where the government lies or the policies of the government lies, and you are with the government because government gives a tailwind to the industry or the sector or the company sometimes. So we will generate good amount of if we spot on to finding out that government policies or regulation change on the time. So we will spot on to generating a huge wealth over a period of time. But we should be cognizant of the fact that government can change their stance anytime if they want to. So that's the sole purpose to highlighting that no, we should be look forward whether this company as a how is the company operating their business or the promoter entity level or the investor perspective level. Yeah, go ahead, Navin.
So next up is, again, this is a very important aspect which helps us understand the quality of management, right? We all love managements which walk the talk, right? Management जो strong execution portray करता है, वो सबको पसंद है. And we have come across one such management in the form of IDFC First Bank, which again Sanjay will explain in much detail.
Yeah. So as Navid has already said, uh, जो कंपनीज और जो मैनेजमेंट जो बात करते हैं ओवर अ पीरियड ऑफ टाइम इन देयर कॉन कॉल और इन देयर public appearance, and if they are able to spot on the same with a particular given period of time, we would love partner with the same management. The same is the case with the IDFC First Bank. The it is merge entity with capital merge entity of Capital First and IDFC limit IDFC Bank, which forms a part of the previous management. So IDFC First Bank is now run by V Vaidyanathan. And during the time of the merger, in the initial phase of the merger, V Vaidyanathan has said that and come up the 5 years plan, and they said that the problems lies in the bank, but I will change the problems, and in 3 to 4 years you will see the stark differences. But for any investors or for any investors, 5 years stuck, it is a difficult time. But if we try to check quarter on quarter, the performance are spot on, given by the guidance given by the management. And we can see quarter on quarter performance in the IDFC First Bank. So standing towards December 19, when the IDFC First Bank merger happened, and standing today, the metrics which has been pointed out by the metrics which has been pointed out by the management has been spot on all the parameters. So barring one, that is cost to income ratio, all other metrics has been in the favor of the bank and guided by the management. And we all love to partner such kind of management in our investing journey. And once we find out that that particular kind of management, we should or we remain intact with the partnering with the same management over a period of time. Now, what do you, Navid?
So after this, sometimes I think this theme has become really prevalent of late. Whenever we see a good management coming into a company which is struggling, we often, right now, the investors get really excited, right? So there is one such company called Butterfly Gandhimathi Appliances, where we believe a strong promoter has already stepped in. Though there are no green shoots which are currently visible, despite entry of the better promoter. So what happened was Crompton and Greaves announced an acquisition of a controlling stake in Butterfly Gandhimathi, and they acquired a 55% stake in around 1400 rupees a share, and then they also opened an open offer at around 1435 rupees. So they have completed their purchase of the complete 75% stake in Butterfly Gandhimathi at around 1420 to 1415 to 1420 rupees. Now, currently, the price at which Butterfly is quoting is much lesser than what Crompton entered into. But rather than focusing on price, we should focus on something which is, highlighted by Crompton very recently in its con call. So, what has Crompton done, right? Crompton, after entering into Butterfly, has taken some really hard steps. Now, Butterfly was a business which was highly corporate gifting driven. So Crompton decided this quarter that, okay, fine, let's leave that business on the table and become an entity which is a well diversified entity and not a seasonal entity. So Crompton said, okay, fine, we don't want sales which are lumpy in nature. Similarly, initially when Butterfly was taken over by Crompton, it was a highly e-commerce driven franchise. Again, Crompton intervened and reduced the e-commerce part of it, tried to increase the traditional channel part of it where it is strong. And most importantly, if you see the commentary of the management, they are saying, having said that, we do not want to compromise on advertisement spending. So they are doing what is right for the business rather than being focused on the stock price or being focused on the reaction of the market, etc. They are doing what is right for the business. They are letting go sales which are not good quality in nature. They are stepping up advertisement spending, which is obviously something which is really important for a consumer facing company. And most importantly, operationally also, they are trying to establish the production facilities in such a way that Crompton's product, which are currently heavily outsourced, are manufactured into Butterfly Gandhimathi's facilities, giving a cost advantage to the combined entity. At the same time, they are giving Butterfly an advantage in the form of a strong distribution, a strong pan-India distribution which Crompton enjoys. So going forward, what Crompton is trying to do is Crompton is trying to make butterfly products available at a pan-India level, which is currently a very south-focused brand. So Crompton is trying to, in its true sense, Crompton is trying to bring out the power of one and trying to operate as a singular entity. The company also tried to merge both these entities, but shareholders did not approve that transaction, and therefore the merger is not going through anymore. But if you look at what the management is doing on ground, you will feel that yes, the management is taking the right steps, is doing the right things, which are in the interest of the business in the long run. Obviously, the share price is not. Market is not currently acknowledging this fact, and obviously, this is because numbers are also not reflecting the efforts which the company has done till date. So this is how we believe, a strong management or a seasoned management entering into a business which is not that strong can create a huge difference. And here is one example which we wanted to cite. Now, managements are supposedly smart people, right? But these smart people also do things which are not really smart or, sometimes funny in nature. So this is what we were able to observe in a company called Man Industries. Again, a sector which is in super tailwind, stock has done really well. But if you look at what happened, so what happened was SEBI directed Man Industries to come up with proper disclosures. So what happened was SEBI initiated some kind of an investigation on Man Industries, I think a long time back, but SEBI was able to find out that Man Industries did not inform the exchanges properly about that particular search operation, and therefore, SEBI directed Man Industries to again go to the stock exchanges and give that clarification that SEBI conducted an audit on us. So Man Industries came up with this clarification on 10th May 2022. And obviously, as it happens, the next day itself, the stock fell by 14 to 15%. Now, owing to this correction, maybe the promoter got excited or I don't know what happened. The promoter missed out on the ongoing silent period which was taking place at that point and went on and bought 1 lakh shares of the company from the open market. Now, this is what happened next, right? Few days later or sometime later, there was another announcement which said that the company has violated the SEBI code of conduct under the Prohibition of Insider Trading Act, and this is exactly the explanation which I would read out for you. They said that the management has purchased 1 lakh equity shares of the company during the trading window closure period, right? And therefore they had to pay a penalty, which is again a very small penalty. But these kind of activities, so they say, right, action speaks louder than words. So if you are able to find these kind of subtle activities by the management, now you don't expect a listed company to miss out on such simple, such silly compliances, right? Again, it has nothing to do with the stock price. Stock price has to, has done its own journey. But this is something which we were able to find, and when once we see these kind of activities done by the management, it becomes really difficult to trust these managements. So I think with this, we conclude our management part of the smart framework. And again, we can take questions, Prince Bhai, if you have any.
Right, Naman. Great points, team. So capital allocation is indeed very important aspect. So there could be two things which come to my mind. One is like that the management is doing wrong capital allocation on purpose, and the other could be the management is not aware of what it is venturing into, be it like unrelated venture or similar kind of thing. So how you can make a segregation, because as you explained in the last point, smart people doing dumb things. So that this mental model or this framework can also be like seen in the light of capital allocation. So how we can make a segregation, and on the top of that, like also if you could highlight like meeting the management is again one way of screening them, and be it the body language or the hunky dory stories the management telling us or the people who are meeting. So how to like make a segregation that the pointers being discussed by the company are not out of ill intention or so as to project themselves good. How you make a segregation, and on the top of that, like if you do not get any chance to meet any management, are there enough resources so as to understand the investable decision?
So, I think multiple questions. Answering your first one, where you asked that, management is venturing into a business which is unrelated. So, sometimes what happens is management takes on a new venture in a big way, and on the flip side, management takes on a new venture in a way where it is, kind of testing waters. So how we look at it is testing waters, trying to expand your wings and become a more diversified player is something where we are ready to give you a benefit of doubt. But if the management is venturing out into a unrelated business in a big way, we might want to look at some execution on the table and then maybe say, yes, the management has taken the right call. So I think that is how we would like to look at the first aspect which you said.
So to add, what Navid had said for the first point, in the 2020s, or I don't remember the exact year, but BKT trying to venturing out, expanding their wings in the US businesses. So they're trying to set up the US business, and that's a big amount they are trying to spend over there. And in the same way, the shareholders the has not liked that way, and the stock price has corrected over that period. And eventually, or within a stipulated time, the company has changed the decision, not necessarily because of the share price change, but they find out that the decision is not right to moving out that businesses away from the low cost producer to now moving to the country where the cost production is higher and moving there. So so that's gives the how management is quick, flexible enough to change their decision, or how much, as Navid said, how much the bigger side they are betting on.
So just to give you a classic example of this, Pidilite Industry is an excellent example. So those guys are acquisition driven, but those guys do not acquire 1,000, 2,000 crore businesses. What they generally do is they acquire 50, 100 crore businesses. If they fail, it's not going to impact the balance sheet materially for Pidilite. But if they succeed, it can drastically change the journey or the business prospect for the company. So for example, all this Doctor Fixit and all those brands, right? And those brands were not organically built by Pidilite. It was more those brands which were acquired for 100, 200, 300 crores, and then over a period of time, using the distribution network and the strength, they have built on it. So those kind of companies where they're doing the capital allocation, as Navid rightly said, testing the waters कि ठीक है brand छोटा सा है लेके देखते हैं, सक्सेसफुल हुआ तो ठीक है, नहीं हुआ तो there are n number of skeletons with Pidilite Industries जो उन्होंने एक्वायर किए नहीं चले, बट उनका ना आरओसी इम्पैक्ट हुआ उसकी वजह से, ना उनके मार्जिन इम्पैक्ट हुए, ना ही उनकी बैलेंस शीट स्ट्रेंथ खत्म हुई, राइट? सो डूइंग दोस थिंग्स इज prudent capital allocation again.
Say one is like when we get to meet our management, what all we can judge from the talks or maybe the body language of the management, and on the top of that, if what happens most of the times for most of the companies that we are not able to meet the managements, right? In that case, do you think like without meeting a management, also we can holistically do a good research basis which we can take our investment decisions?
I think one thing that you can do is just check if you post meeting with the management, and this happened recently with us. We met one sub 100 crore company management, and management blatantly said that they are debt free and they do not have any debt on their balance sheet. But when we went back and checked the numbers, actually company had 11, 13 odd crores of debt. So cross check whatever the management says, whether it adds with the number or not. It's just a qualitative commentary that the management has given. It's a basic thing, I think. By not even meeting from con calls or even on the management interviews, also you should always cross check the data that they are speaking of.
I think trust but verify can be a good mental model which we can
Right.
give to the participants out there. You should trust, but you should obviously verify as to what they are saying is true or it does make sense. I think all these things can be answered by just wearing a common sense hat. If you keep your common sense meter on, I think you are most of the times you will be able to take care of yourself. Yes, please
And
go
so
ahead.
finally, coming to the last question that how should, if people are not meeting management, how, should judge the characteristic of the management? So I think this 8 points that we have discussed, if you, actually see, none of them are involved or with की मैनेजमेंट से बात करके इसमें पॉइंट्स में से कुछ आइडिया लगेगा. ये सारे के सारे पॉइंट इंडिपेंडेंट पॉइंट्स है. जस्ट बाय रीडिंग एनुअल रिपोर्ट्स और गोइंग डूइंग द सिंपल गूगल सर्च, you can get insight on all these 8 points, which gives you a fairly good understanding of management thought process, management का approach, and management अपने business को कैसे देखता है basically.